In trading, there is a type of trader that position themselves ahead of everyone else just before an explosive move begins. And we might think that they have a magical algorithm or secret information. But no, sometimes all you need is a super simple indicator that can make all the difference. Today, we're gonna see what the Donchian channels are, what's their purpose, how to use them, and I'll even test a trading strategy using this indicator to see what's under the hood. Technically, the Donchian channels is an indicator that allows you to see the highest and lowest price reached over a specific number of candlesticks. As you can see, it draws some channels around the price that immediately shows you potential breakout areas as well as consolidation areas. But before we dive deeper into the action, let's go back in time. The Donchian channels were created by Richard Donchian, who was a pioneer in trading trends. He's actually often called the father of trend following. He created this indicator to visually be able to spot the moments at which price gets out of its comfort zone. And when these breakouts happen, they can lead to massive moves. The Donchian channels indicator is composed of 3 lines. We can see the upper line, which corresponds to the highest price reached over X candles, the lower line, which corresponds to the lowest price reached over a certain amount of candles, and in the middle we have the middle line, which is the average of these two. On many charting platforms, by default, the indicator is set up with a period of 20, which means it's going to show you the highest and lowest price reached over the last 20 candles. But of course, you can change this parameter and use whatever period you want, whether you want to know the highest and lowest price reached over the last 10, 50, 100, or 60 or whatever candlesticks. This indicator allows you to see 2 things. First of all, the volatility. The bigger the magnitude is between the upper and the lower lines, the bigger the volatility. And on the opposite, if the channel gets tighter, that means the price movements are getting weaker and there is less and less volatility. And therefore, there is less price distance between the highest and lowest price reached over the last X candles. Now, the second thing that this indicator shows is the highest and lowest prices reached over a certain amount of candles. So for example, here on this chart, I've set up the indicator for a length or period of 50. That means the upper line shows me the highest price reached over the last 50 candles, and the lower band here, its current value is the lowest price reached over the last 50 candles as well. And that's exactly what makes the Donchian channel so interesting. It's simplicity. At a glance, at any point in time, I can immediately spot what the highest price and lowest price were over a specific amount of candles. And as a result, I can instantly see when that highest or lowest price is breached. And therefore, that means that something important is occurring on the price. When the upper line's value suddenly increases, that means we have an upwards breakout. And on the opposite, when the value of the lower line decreases, that means we have a bearish breakout. Thanks to the Donchian channels, breakout traders can in one glance spot a breakout that's currently happening. For example, here, as soon as the value of the lower Donchian line decreases, that means that the lowest price over the past 50 candles is breached to the downside. And therefore, that's a signal for breakout traders to get in the action and look for momentum to the downside. And on the opposite, when we see the value of the Donchian upper line increase, that's the signal for breakout traders to open a buy trade and look for a continuation to the upside. As I mentioned in the beginning of this video, breakout traders are the very first ones to position themselves when a strong move begins. But as you may already know, it's not because the value of a Donchian line changes and we have a breakout that necessarily afterwards a strong move will occur. Sometimes there may be what we call a false breakout or a fake out. And look, this was actually the case right here when the value of the lower Donchian line decreased. Therefore, we had a breakout to the downside, but there was no further continuation and no further momentum. Actually, right after the breakout, the price quickly reversed to then go break to the upside and target the upper Donchian line. So breakout traders who opened a sell position as soon as they saw this breakout to the downside occur in real time were actually the very first ones to get trapped. And this example clearly illustrates the other side of the coin when trading breakouts and when wanting to be the very first one to capture a potential trend. Because yes, by wanting to be first, when it works, breakout traders are actually very early in explosive move and in beginning trends. For example, traders who bought Ethereum right here after the breakout or right here again were able to ride a lot of pips to the upside. But when a fake out or false breaks happens, they're actually the very first ones to get caught on the wrong side of the market. And this illustrates once more that in trading, there is no perfect strategy. Every strategy comes with its strength and its disadvantages. Breakout trader who wants to be the very first one to capture an explosive move will be able, if it works, to ride and get a lot of pips or points or percentage points at the risk of seeing the market quickly reverse against their position if we have a false break. Whereas a trader who waits for the trend to get clearer and materialize, for example, who wants to see a first push upside and then a consolidation phase and then wants to position himself or herself when we have a break of the consolidation phase, will have lower risks of seeing the trend suddenly reverse as soon as they enter their trade, but they also get into the action later. So again, these two different approaches each have their strengths and weaknesses. And one should know that a breakout that actually works, if I might say, and that is followed by an actual continuation of the move to the upside, like we had here, first of all, will be clearly visible in real time because the value of the upper line of the Donchian channel will increase as soon as the breakout occurs. And the continuation of the move to the upside afterwards is powered by two things. First of all, at any point in time, you have traders who hold short positions, and these traders might have their stop losses right above the most recent highs because that's where they do not want price to go for their short scenario to still be valid. So traders who have their short positions open might have their stop losses right above, for example, the highest high of the last 50 candles. So their stop losses are layered right above or close above the level, depending on how many pips or ticks they want to let as a buffer. But you can be sure that above, like the highest high of the last 50 candles, there will be resting stop losses here, the stop losses of short traders. So as soon as price breaks out of this highest high, all these stop losses that were layered right here, they get triggered and then they thus become market orders who will buy at whatever the ask is on the order book. Now, on top of that, you also have the pending stop buy orders of the breakout traders who, as soon as price ticks or slightly goes above the most recent high, they will want to open a buy trades. So these pending orders, as soon as the price is reached, will also turn into market orders who will absorb whatever the ask prices are in the order book. So when you combine the stop losses of the short traders and the pending buy orders of the breakout traders, who most often are right above technical levels or the highest high or the lowest low or psychological levels, when that level is breached and there is a breakout, you can be sure that all these resting orders will get triggered, and that will create a lot of sudden liquidity in the markets. And that sudden burst of liquidity when price goes beyond a certain level is very important for institutions who want to unload their inventory at a very optimal price. And that's why on the charts, you often see price wick above an important technical level, only to see it reversed afterwards. By wicking above a very important level, all those stop losses or pending buy orders were triggered, thus bringing a lot of liquidity, then allowing institutions to unload their inventory and then buy or sell at the best price. But when you don't have institutions going against the breakout and absorbing the liquidity, that's when you have the explosive moves happening. Now, I actually want to give you a small tip who, in my opinion, makes the Donchian channels more relevant by not considering the highs and lows of wicks as true and valid highs or lows. For that, all you have to do is, for example, on TradingView, plot the Donchian channels on your chart, then right-click on one of the lines, go on source code, and here create a working copy of the Donchian channel, and look at line 5 and 6, lower and upper. After the first parenthesis here, just type close, comma, and add a space. Do the same thing for line 6, type close, comma, and add a space. You can then save the indicator if you like and add it to the chart. Now look at the new Donchian channels in blue compared to the previous one by default in gray. As you can see, the channel is now slightly narrower because it doesn't take into account the highs and lows from wicks as the true and valid highs and lows, but instead of that, it uses close prices. And this slight tweak allows breakout traders to actually get in position when price has truly broken through its highest or previous close price. For example, look at this candle wicking up here. The default Donchian channel now considers this high from the wick as the true high over the last, in that case, 50 candles, whereas the tweaked Donchian channel considers the close price as the highest point reached over the last 50 candles. That means for breakout traders to want to get in a buy position, if price continues to break out to the upside, with the default Donchian channel, it would have to break this price right here. Whereas for breakout traders who use the tweaked version of the Donchian channel, it would have to break through this price right here, with a close price, of course. Now, of course, this tweak is minor, but I believe over a large amount of trades, it would allow traders who use the tweaked version of the Donchian channels to get in at a slightly better price every time. And also, but it's just my opinion, I believe close prices to be more relevant than prices reached through wicks. It would also allow to filter out wicks that are only liquidity runs, like would be the case right here, where the default Donchian channel now considered this a breakout and the valid new high. The Donchian channels were and are still used as professional trading strategies, like the turtle traders, for example, who made millions thanks to, well, the Donchian channels. And the former trader of this turtle traders group has up to this day run his hedge fund very successfully with breakout and trend following strategies using the Donchian channels. Because yeah, the Donchian channel can be used to detect breakouts, but it can also be used to ride trends. And this was actually such a system that the turtle traders used. They would buy when there is a breakout of the 20 period high and when the upper line of the Donchian channel would increase, and they would ride the trend and exit when a 10 period Donchian channel, when the lower line would decrease. So this is the move that they would have ridden. Then again, they would have bought here, got stopped out at a loss here, and they would get in again at the breakout right here until the value of the lower Donchian line decreases right here. And they would repeat such a system over and over again across multiple assets, thus riding multiple trends. And that's how they made dozens of millions of dollars. Now, of course, despite these clear rules, who were very successful at the time, some traders didn't manage to make a penny. But that was more a psychological issue, and that's a whole other story. More recently, some traders backtested trading systems similar to the approach of the turtle traders, but with tweaked parameter value. So for example, instead of using a 20 period Donchian as their entry rule, they would use a 200 period, and for the exit, they would use a 50 period Donchian channel breakout to the downside, for example. And they had very good results. And this shows that breakout and trend following strategies clearly still have their place in a trader's arsenal, because though the markets might be more choppy and ranging today than they were, let's say, decades ago, there are still clear trends happening across multiple assets all the time. Prices on the market will always be the sum of people's hopes and people's fears, therefore leading to trends to the upside or trends to the downside. And as we've seen, Donchian channels can allow a trader to position themselves very early in said trends, and therefore ride a trend for as long as possible. Now, I want to backtest a trading strategy that uses the Donchian channels, and one of the most popular one is the system used by the turtle traders. Now, it's important to know that since the strategy rules have leaked at the end of the 1990s, if I'm not wrong, the strategy has quite lost some of its edge because it's been democratized and popularized. And when more and more people want to do the same thing or use the same strategy, that's when the edge decays. But nonetheless, we can still test it on Bitcoin. And my hypothesis is that if it doesn't work on Bitcoin, which has been a pretty good trending asset, then there is no way it will keep working on other assets like major pairs on the Forex or indices or whatever. So I'll just backtest it on Bitcoin for now. And here I'll just type what I want to do in plain text. So I'll just say we use the turtle trading strategy with the Donchian channels on a 2-hour chart. Since this is a famous strategy, Opsid's AI, I think, will understand what to do. So I will backtest it over the last 8 years and we'll use a 2% risk if our trades are stopped. Okay, the backtest is ready, so let's go. Now, as a reminder, if you also want to backtest your own strategies using plain text like I just did, with no code at all, you can just start now on opside.com. You can start for free, type in your strategy, entry and exit rules, select the asset on which you want to backtest it, and you'll get the results almost immediately. All right, here are the backtest results, and what we can see is that they're not bad at all. Historically, the strategy has brought in a 5,300% return with an annualized return of 65% on Bitcoin. So as I said, yeah, it helps a lot that Bitcoin has been pretty trendy. Though the strategy has struggled for some time, as we can see here, between 2021 and 2023, it had a rough patch here because it was flat for almost 2 years. And more recently, it's also been struggling from 2024 up until now because though it had its recent high here at the beginning of the year, it's quite going horizontal there. But it's been able to ride most of the trends on Bitcoin pretty well. So obviously, a trading strategy that uses the Donchian channels as simply as the turtle trading system can still be effective on some assets that are very trendy, like Bitcoin. But I'm not convinced at all that if we backtested that on any major pair on the Forex or an index or any other type of assets, it would have been historically as successful as it was on Bitcoin. But you know what? I'll let you do that because, as I said, you can get started right now and test any trading strategy you have in mind, whether it uses the Donchian channels or not. And I'm actually sure that you will do much better than this. Okay, if you're still watching up to now, just say turtle in the comments section. And if this video helped you in any ways better understand the Donchian channels or what is breakout trading, feel free to leave a thumbs up, subscribe, or comment whatever. That will truly help the channel. As for me, I'll see you very soon in the next video. Bye.